Get ready because the market is moving faster than a lightning bolt, and you need to know what's happening now. This is Bitcoin Bulletin, where we bring you the absolute essential updates that could shape your portfolio. We've got a massive show lined up, packed with critical intel that the mainstream just isn't catching. From major price movements to shifts in institutional interest, if it's moving the needle, we're covering it. Don't blink, because you might miss the next big wave. First up, we're diving deep into the current state of Bitcoin, dissecting why it's holding a key support level amidst a sea of investor caution. Is this a pause before the next surge, or are we seeing a fundamental shift? We'll break it all down. Then, we're shifting gears to explore the altcoin market, where some assets are hitting critical oversold levels. What does this mean for the wider crypto landscape, and could this be a golden opportunity? We've got the insights. After that, prepare for a deep dive into the institutionalization of digital assets, examining the pivotal roles Bitcoin and Ethereum are playing in what could be the next supercycle. This is big picture stuff that you absolutely cannot afford to miss. And finally, we're tracking a significant capital shift, uncovering where institutional money is moving and what it means for your investments. Are we seeing a pivot away from Bitcoin towards other major players? We've got the data, the analysis, and the breakdown. It's all happening right here, right now. Stick around, hit that subscribe button, ring the notification bell, and let's get into it. Bitcoin holds key support amidst investor caution. The cryptocurrency market is a whirlwind of activity, and staying informed is absolutely paramount for any investor navigating its volatile currents. Bitcoin, the flagship digital asset, has recently shown resilience, holding firm at the $111,500 mark. This level is proving to be a critical support zone, a floor that has so far prevented a steeper decline despite a prevailing atmosphere of investor caution. The market sentiment appears to be one of watchful waiting, with many participants hesitant to make bold moves until clearer trends emerge. This cautious approach is understandable given the rapid price fluctuations that characterize the crypto space, where fortunes can change in an instant. The ability of Bitcoin to maintain this support level is a significant indicator, suggesting that underlying demand remains robust even in the face of broader market uncertainty. Analysts are closely watching this price action, as a sustained hold above $111,500 could signal a potential base for a future upward movement. Conversely, a break below this key level could trigger further selling pressure and a reevaluation of short-term market direction. The factors contributing to this caution are varied, ranging from macroeconomic uncertainties to regulatory developments impacting the digital asset landscape. Investors are weighing these elements carefully, seeking clarity before committing significant capital. The dynamic nature of this market means that what looks like a consolidation phase today could easily morph into a significant breakout or breakdown tomorrow. Understanding these nuances is crucial for making informed decisions and managing risk effectively in this fast-paced environment. The resilience shown at this support level is a testament to Bitcoin's established position, but the ongoing investor caution means the situation remains fluid and subject to rapid change. We will continue to monitor this critical juncture for any signs of a definitive trend. But is this a temporary pause, or is something bigger brewing in the altcoin market? We're about to find out. Altcoins teeter near oversold territory as Ethereum gains ground. The broader cryptocurrency ecosystem is experiencing a significant shift, with many altcoins now flashing critical oversold signals. This technical indicator suggests that prices may have fallen too far, too fast, potentially setting the stage for a rebound. However, the underlying market dynamics also reveal a more complex picture, particularly concerning the evolving market share between Bitcoin and Ethereum. While Bitcoin faces its own set of challenges and investor sentiment fluctuations, Ethereum appears to be steadily capturing a larger portion of the market's attention and capital. This divergence in performance and perception is becoming increasingly apparent as key metrics are analyzed. The oversold conditions across many altcoins present a classic dilemma for traders. Is it a buying opportunity or a sign of deeper underlying weakness? The answer often lies in understanding the broader market trends and the specific fundamentals of each asset. Ethereum's growing market share, however, points to a potential rotation of capital and interest within the digital asset space. This could be driven by a variety of factors, including the ongoing development and adoption of its ecosystem, the anticipation of network upgrades, or simply a strategic reallocation by investors seeking alternative opportunities beyond Bitcoin. The fact that Ethereum is gaining ground, while other altcoins are hitting oversold levels, suggests that investor focus might be narrowing, concentrating on assets perceived to have stronger fundamentals or clearer growth trajectories. This trend is particularly noteworthy for long-term investors and analysts who are trying to predict the next phase of the crypto market cycle. The current scenario highlights the importance of not just looking at individual asset performance, but also understanding the intermarket dynamics and capital flows that are shaping the overall landscape. As more data emerges on altcoin performance and Ethereum's market penetration, a clearer picture of the future direction for these digital assets will undoubtedly come into focus. But could these market shifts be driven by something even larger, the increasing role of institutions in the crypto world? Let's explore. The institutional embrace, Bitcoin and Ethereum spearheading a crypto supercycle. The narrative surrounding cryptocurrencies is rapidly evolving from a fringe technology to a mainstream investment class. And at the heart of this transformation lies the growing institutionalization of digital assets. Both Bitcoin and Ethereum are emerging as pivotal players in shaping what many believe could be the next major supercycle in the crypto market. This institutional adoption isn't just about increased trading volumes. It signifies a fundamental shift in how traditional finance views and integrates digital assets into portfolios. The increasing accessibility through regulated products like exchange-traded funds, ETFs, has been a game-changer. These instruments provide a familiar and trusted gateway for institutional investors, including asset managers, hedge funds, and even pension funds, to gain exposure to cryptocurrencies without the complexities of direct custody or wallet management. Bitcoin, as the original cryptocurrency, continues to hold a significant position, with its ETFs attracting substantial assets. However, Ethereum, often seen as the digital oil, powering a vast ecosystem of decentralized applications, smart contracts, and NFTs, is also commanding significant institutional attention. Its unique utility and potential for future growth are increasingly being recognized. The interplay between Bitcoin and Ethereum within institutional strategies is crucial. While Bitcoin is often viewed as a store of value, a digital gold, Ethereum is increasingly seen as a platform for innovation and future economic activity. This dual role means that institutions are often allocating capital to both, recognizing their distinct but complementary value propositions. The development of Ethereum's ecosystem, including advancements in scalability and the ongoing transition to more energy-efficient consensus mechanisms, further bolsters its appeal to institutional investors who are increasingly focused on ESG, environmental, social, and governance factors. As more financial advisors and institutions increase their holdings and explore the integration of these digital assets, the foundation for a sustained supercycle is being laid. This trend suggests a long-term conviction in the potential of blockchain technology and digital currencies to reshape various industries and financial markets. The institutional embrace is not just validating the crypto market. It's actively expanding its reach and influence, potentially unlocking unprecedented growth and innovation in the years to come. But where exactly is all this institutional capital flowing, and is it signaling a major shift in dominance? We've got the latest data. Capital flight. Institutions pivot from Bitcoin ETFs to Ethereum ETFs. A significant trend is emerging in the world of cryptocurrency investments, marked by a noticeable shift in institutional capital allocation. While US-based spot Bitcoin ETFs initially dominated trading volumes, newer data reveals a compelling pivot towards Ethereum ETFs, which are now outpacing their Bitcoin counterparts in attracting new inflows. This development suggests a potential recalibration of institutional strategy within the digital asset space. On one hand, US Bitcoin ETFs have become major drivers of Bitcoin's spot trading volume, consistently generating billions in daily activity and accounting for a substantial percentage of the trading volume on major exchanges like Binance. This highlights the success of these products in facilitating institutional access to Bitcoin. However, the narrative has dramatically changed when looking at recent inflow data. Over a recent 5-day trading period, Ethereum ETFs collectively attracted an impressive $1.83 billion in inflows, a figure that starkly contrasts with the $171 million secured by Bitcoin ETFs during the same timeframe. This nearly tenfold difference underscores a growing institutional appetite for Ethereum. BlackRock's iShares Ethereum Trust, ETH, has been a standout performer, capturing substantial inflows, while Bitcoin ETFs have seen a significant slowdown in their momentum. This shift is not occurring in a vacuum. Investment advisors, a key demographic for institutional adoption, have demonstrably increased their holdings in Ethereum ETFs, with a notable 68% quarter-over-quarter increase in Q2. This indicates a growing conviction among financial professionals about Ethereum's long-term potential as a diversification tool. Consequently, Ethereum's price has reacted positively, outperforming Bitcoin in recent market performance. Analysts are closely monitoring this trend, suggesting that if Bitcoin ETF inflows fail to stabilize, its dominance in the institutional crypto market could continue to diminish. The increasing allocation to Ethereum ETFs signals a belief in its underlying technology and ecosystem, potentially positioning it for greater influence in future market cycles. This dynamic suggests that while Bitcoin remains a foundational asset, Ethereum is increasingly capturing the attention and capital of institutions looking for growth and utility in the digital asset landscape. So, what does all this mean for the average investor, and what's the big takeaway from today's market movements? We'll wrap it all up next. All right, that's a wrap on another action-packed Bitcoin bulletin. We saw Bitcoin holding strong at key support levels, altcoins showing oversold signs, the institutionalization of crypto continuing its march, and a significant capital shift from Bitcoin ETFs to Ethereum ETFs. Don't miss out on any of these critical updates. Make sure you're subscribed, hit that notification bell, smash that like button, and let us know your thoughts in the comments below. Follow us on all social platforms for even more real-time insights. We'll catch you on the next one.